Let's talk about answers. Does momentum trading actually work? I mean, we've all had great momentum trades and we've all lost on momentum trades, but empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? If momentum trading has worked in the past, it should be empirical and explicit. And that's it. Also, how about technical analysis or technical trading? Does it really work? It's all over social media and fintech news, and if it really does work, okay then. Which indicator has worked the best historically, on which stocks, at what times, when has been the best time to exit? Again, what are realistic average returns? What are historical win rates? It doesn't matter how much noise there is out there. If technical analysis works, the results should be empirical and explicit. That's it. And what about non-directional option trading? Has there been a way to profit from this low volatility world, this low VIX world, without making a directional bet, without betting on a bull market continuing, or even more abrupt if we go into a bear market or a correction? Again, empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? Answers. That's what this is all about. We're going to cover all of this, and we're going to do it pretty quickly. We'll start with momentum, then technical analysis combined with momentum, then non-directional history. All right, let's go. We're going to start with momentum. We'll start with our first pre-earnings pattern. I call this a directional bet on optimism. So one of the least recognized but most important phenomena surrounding this bull market is the amount of optimism that sets in the 2 weeks before earnings in the mega technology stocks. We're talking the FANG stocks. Now this is totally irrespective of whether the stocks have a history of beating earnings. In fact, many of them don't. But in the 2 weeks before earnings, there is a massive momentum rally into the event. What the scanner will help us see later is that while there is this 2-week pattern, sometimes 1 week or even just 3 days presents a better trading window, both with respect to consistency of the win rate and of course total returns. We'll start with 2 weeks here and address the other time periods when we cover the scanner. Let's look at a simple idea. Let's just buy a monthly call option in Alphabet 2 weeks before earnings and selling the call before the earnings announcement. So we'll get long a call, we'll go to custom earnings handling, we'll open the trade 14 days before earnings, and we will close the trade 1 day before earnings. We are not taking an earnings bet. This is a pre-earnings trade. And here are the results. We can see across the board, this has been a winner. And just to see what's happening, we can look at the stock price. This is a 2-year stock chart of Alphabet, where the blue E icons represent the earnings. What's so interesting here is that while the stock almost always rallies before earnings, you can see that with these little yellow arrows into the earnings, the stock goes down off of earnings a lot. In fact, that's what these yellow rectangles are. This is how many times Alphabet missed earnings. It's just a coin flip, but it never interferes with this optimism, this bullish momentum. While we're looking at this, we might as well look at the rest of FANG. So I'm just going to put the rest of the tickers in here, comma delimited. As I said, this works with all of the mega tech stocks, but what we need to do to find the best trades is to focus on the win rates. Netflix and Amazon are a coin flip. Even though the returns are positive, these aren't the best of breed. But a good trade turns into a great trade only after we do risk control. So let's drop a tight stop on these calls and also a tight limit. We'll go down to the close trade when section. We will close these long calls if they go up by 30% in a 2-week period. And we'll also close them if they go down by 30% in a 2-week period. All of a sudden, the trade is clearly in Alphabet and Facebook, not Apple, Netflix, or Amazon. So let's focus on those two. Now we can see the staggering returns, and we can see 15 wins on 1 loss if we held these 2 as a portfolio. And just so you know we're not pulling a fast one on you, and that calls always work on these companies, we can just look at the 15 days after earnings. So we'll open 1 day after earnings and close 15 days after earnings. And these trades are actually negative. So this is in fact a pre-earnings momentum trade based on the personality of this bull market. While we're here, let's go ahead and look at another trade that's very similar. We'll go to custom earnings, and this time we're going to look to open the trade just 1 week before earnings, so 7 days before earnings and closing it the day before, as opposed to the 2 weeks before earnings trades we looked at with Google and Facebook. And this time we'll look at NVIDIA. So we're going to buy a call 7 days before earnings, close it the day before earnings, we'll put a stop and a limit, and we'll look at the last 3 years. And here we can see with NVIDIA, 11 wins and 1 loss with a 1,352 total return. And if you're wondering how I knew to look at NVIDIA a week before earnings, this is how. We're going to introduce the Pro Scanner, which is available to Trade Machine Pro members. We select Pro Scan, Then we select by strategy. We can choose any grouping of stocks, but for now, we'll use the S&P 500. Since we're looking at pre-earnings momentum trades, we're going to scroll down to the pre-earnings section. You'll note that we scan for 14-day, 7-day, and 3-day pre-earnings momentum trades. We'll select the 14-day since that's what we're looking at with Google. The scanner automatically sorts the results by win rate, and since the 14-day scan does not use a stop or limit, the highest win rate in this group of tickers is actually the tech gem Akamai, with 10 wins out of the last 11 earning sessions for a 91% win rate. We can see a 38% average return per trade, and that includes the one loss. That's over 38% for just 14 days. The total backtest return is 426%. Finally, we can see Google, and here are the results before we put in the stop or the limit. We can also sort our results by the total backtest return. So this is for the trader that's comfortable with the backtest that has shown a lower win rate but larger returns. Let's now look at the 1 week backtests and just look at the 3-year results. So we'll tap on 7 days and we'll deactivate the other buttons. We can see NVIDIA here. This is a tech darling that has had immense pre-earnings momentum, showing 11 wins out of the last 12 pre-earnings sessions, with an average return of 39% in a week or 493%. For those of us that like trading the tech names, we can select the NASDAQ 100 and sharpen our scan results. We can find a familiar name as well, which is Microsoft at the top of the list, which has won for 3 years in a row the 1 week before earnings, showing an average trade return of 50% per week. Microsoft is one of those curiously forgotten tech names. Let's let the rest of the world forget about Microsoft. We will not. Now this 7-day pre-earnings backtest and the 3-day earnings backtest, which is really just a tight swing trade, do in fact implement a stop and limit of 40%. This is our first exposure to the Trade Machine Pro scanner, and all we have done so far is just look at a very small subset of another subset, which are pre-earnings scans, the momentum patterns. But this leads us to one of the other benefits of the Pro scanner. We can simply click on a ticker and it will load the backtest in our Trade Machine for us. So let's click on Microsoft, and here are our Microsoft results. 12 wins, no losses. And down here is where the limit gain and the stop loss have already been implemented. We can click on custom strategies and we'll see we are looking at, in fact, this 1 week trade. So we finished step 1. We found answers for momentum trading. Yes, it does work. The trade entry can be 3 days, 7 days, maybe even 14 days before earnings. The scanner shows us which securities have worked the best in the past. It shows us when to exit using the stop loss and the limit gain. It shows us what the historical returns are. It shows us what the historical win rates are. So has momentum trading worked? Yes, it has. Now let's turn to technical trading. While there are hundreds, if not thousands, of technical indicators, in the Trade Machine we focus on very few. Right now we're going to focus on what has been called the TTM squeeze, first discovered by famed trader John Carter. This signal is actually a combination of 3 technical indicators to make a single signal, and that signal can either be bullish or it can be bearish. Now, it's always important to understand precisely what a trade is doing. So to understand this signal, we have written a full-blown dossier with the videos linking back to John Carter's discovery several years ago. You get to the dossiers by going to the Discover tab, and then looking under FAQ, you can go to Technicals in the TTM Squeeze, and when you tap on that link, you get a full-blown explanation of how this works. So not to run too long, we're going to skip a description, but remember, the details are available through the Discover tab, and there is never an excuse to trade without understanding the facility behind it. And while this might sound complex as we've introduced it, like most technical trading, it really isn't. It's very clever, it's very useful, and it's also very easy to understand. So now we will look at technical trading with options, and we won't pay attention to earnings at all. That is, we are looking at technical momentum as opposed to pre-earnings patterned momentum. The idea behind the squeeze is that for the vast majority of the time, stocks tend to move pretty quietly sideways. Then they move abruptly either up or down, and we're not talking about those big earnings moves. That is, we're here to answer the question we posed at the top of this video. Does technical analysis work? Here we go. We'll stick with Microsoft. We'll get long a call. We will do nothing special with earnings, and we will tap on the bull squeeze. We'll go to our settings, and we're actually going to set the start date to 5 years ago. So we're going to get 5 years of data. And here are the results. Before we even look at them, let's tap on the backtest tile to see all of the trades. You can download all of this data into Excel. And if we do that, we can see how infrequent the signal is. It turns out that over this 5-year period, which is 1,824 days, the trigger was live for only 218 days, or 12% of the time. This just gives us a great feel for what this signal looks for and the unusual periods when a stock is making an abrupt move. Now let's look at the results. We can see 18 wins and 4 losses for nearly an 82% win rate with a 664% return. It turns out that the average trade time for this in Microsoft was just 10 days. Let's just look at another FANG stock. We'll type in Facebook. Here with Facebook, we see 16 wins on 4 losses, or an 80% win rate, and another staggeringly large return. But here's the real power, or really, the piece of data that makes this technical signal so powerful. We've been in an historic bull market for more than 5 years, so it makes sense that the signal would work during a bull market. But it should also help identify the times when being short the market, or with options, owning puts has actually worked. And we don't even have to get fancy with it. Let's just look at the Dow Jones Industrial Average through its ETF, DIA. So we'll type in DIA and we'll look at a bear's squeeze and buying puts. Now we can see the results of buying this puts with the bear's squeeze while in the middle of a raging bull market. We see a 332% return on 10 wins and 1 loss. And if we tap on the backtest tile, we can see that the average return is 29%. Now this isn't a silver bullet. When the trade lost, it lost more than 17%. But this shows the power of this technical indicator. Even in the midst of a bull market, there are periods where getting short the market through getting long puts has been an enormous winner. So that's it. We wanted answers to these questions. Does technical trading actually work? What is the signal for trade entry? It's either the bull squeeze or the bear squeeze. And where do we find discovery of the companies or ETFs where this has worked the best in the past? As always, it goes back to the Pro Scanner. And now we have completed step 2. We have with great specificity questioned, tested, and discovered the results of patterned pre-earnings momentum and technical momentum irrespective of earnings. Our final task now is to answer, what about non-directional option trading? And here we go. It's long been believed and proven that simply owning an at-the-money straddle in most stocks is a loser. In fact, we can do it with our backtester looking at Google. Here it is, getting long a straddle, doing nothing with earnings over the last 3 years, buying the 30-day option. This trade has only a 41% win rate and is down 57% over the last 3 years. But we started this discussion with a question, which is, what about non-directional option trading? Is there a way to profit from it without betting on a bull market continuing, or even more abruptly, even if we go into a bear market or correction? And we want empirical results. Does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? Since we see normally owning a straddle in Google has been a loser, let's try something different. We'll come down to custom earnings. And now we'll look at opening the trade 1 day after earnings and closing it the week after earnings. That is, it's a 1-week trade right after earnings. So the stock does its gymnastics after earnings, we wait a full day, then we buy a straddle with the 30-day options. And here are those results. Over the last 11 earning periods, it has won 9 times and only lost twice, with a 263% total return. Remember, when we did this without using custom earnings dating, it was a 57.5% loser. We can find dozens, if not hundreds of these opportunities where owning volatility looks like a loser and the market believes it to be a loser. But timing it correctly around earnings has proven to be a gigantic winner. And the answer, of course, whether it's before earnings or after earnings, is in the Pro Scanner. So we go back to the Pro Scanner, we go by strategy, we pick our ticker group. In this case, we'll just look at the S&P 500. We have the 7 days post-earnings long straddle, which we looked at with Google. Or if we prefer, we can look at 7 days pre-earnings or even 14 days pre-earnings. So these 3 scans find us the companies where owning volatility, even in this low VIX world, has been a winner. So we can answer empirically. It does work. We do know the best trade entry. We do know which stocks have worked the best, and we do know the best time to exit by using our stops and limits. We started this discussion saying we wanted answers to 3 questions. Has momentum trading actually worked? Has technical analysis actually worked? Has non-directional option trading actually worked? And if so, we should have empirical and explicit answers for each of those. We've answered our questions, And we have been empirical, and we have been explicit. There are other questions that the trade machine can answer, like has non-directional option trading while selling options worked? And if so, when? And in which securities? And what are the historical win rates? The trade machine was built to answer questions for traders. It was built to be empirical. It was built to be explicit. And of course, it was built to be easy to use. There's so much more the scanner has, including custom portfolio building. But for now, we have succeeded in our goal. We have answered our questions, and we hope you are a more powerful trader for watching. Thank you for your time. Now, of course, we just focused on earnings-related trades. If you like trading the actual event, we have a button for that. You can just click Only Trade Earnings and test any strategy you want, whether it be custom or pre-built, during the earnings event. And of course, for all other times, you can always just select Never Trade Earnings, and you can do the same thing. You can create your own custom strategy or pre-built strategies. And finally, it bears repeating, while we just looked at the FANG stocks, we cover every stock and every ETF and every index in North America as well. The opportunities are there. You just need to find them. So this is it. This is how people profit from the option market. It's preparation, not luck. Thanks for watching.